So I'm a big believer, folks, in using a combination of price and volume. I think that stocks that move up in price aren't as valid without volume, and stocks that trade a lot of volume that don't go anywhere aren't as valid as, obviously, because price matters. That's the one thing you need to know. In my room, I'm very big on price volume surges, but if a stock is moving without a lot of volume and the pattern is very strong, we may go with it. But one thing I want you to know is I look for the stocks that are gapping up in the morning, stocks that are popping out of a range, a pattern, something that maybe is initiating a move for that day, which could initiate, you'd be amazed how many times my day trades turn into swing trades, turn into long-term trades. Why? Because we caught them at the initiation of the move, when a new move was first starting, and it was a great day trade that day, but there was no reason not to continue to hold it for a swing trade. And certainly a lot of people, like when a year and a half ago, or maybe 2 years ago, I put out a buy recommendation on NVIDIA at 39, and a year and a half later it was 265. So those are the kind of stocks that you love to have because it keeps going up. And you'll see today, and I'll show you some patterns. And again, I wish I had more time today, but I don't. But today's basic stuff is just to give you a flair for what I do and perhaps get you interested. So before I start, I just want to make you one offer. The offer is come into my site for free for 2 weeks with no credit card. Just sign up. See what we do. Utilize all my services for free for 2 weeks. I think you'll be excited. And even if you don't decide to permanently sign up, you'll receive a 2 DVD set on day and swing trading. I realize my girlfriend says to me, who has a DVD anymore? And that's the truth. But these are a couple, 3 years old. And they were made 7 years ago, but everything's relevant. Now, folks, before I get started, I want to raise your hand if you've ever read the book Technical Analysis of Stock Trends by Edwards and McGee. 4 or 5 hands. Okay, this is the Bible of technical analysis. If you really want to learn what charting is all about, what stock chart patterns are all about, what technical analysis of stocks is all about, this is the book to read. It was written in 1948. And everyone goes, how could that be relevant? Guess what? Human emotions are the same. So stock patterns form in all time frames, and they form the same way they do now as they did in 1948. And the reason I know that is I have stocks from 1948 that look charts that look exactly the same. It's amazing. So again, Technical Analysis of Stock Trends by Edwards and McGee. I get no royalties in that book. I'm just telling you to pick a copy up and read it. It's lengthy. It's 1.5 inches thick. And it's written in sometimes a little bit more difficult, but I've read it 7 times. I really believe that there are certain things about technical analysis that are true. The only thing about technical analysis that is the fly in the ointment is that there's human beings involved. And also, there's technical analysis of stock trends. To me, I love the trends. I think they're true. I think they tell me what's going to happen in 80-90% of the cases. But you always get that 10-20% of the time where something doesn't work because a news item hits. Something happens. There's a big seller there. Something goes on that causes the stock to change trends or to pause or pull back. So today, you're going to see just a few quick examples. What I really don't have a lot of time for is to go through my book and all my technical analysis techniques. But I can tell you this. I live in the LA area, in the desert in Los Angeles, in La Quinta, California, if you know where that is, near Coachella. And I get up every morning at 4 o'clock. I'm on my site at 4:15. For an hour, I'm doing nothing but scouring through charts. I'm looking at news. That's the only time I look at news. I'm a pure technical analyst. I don't care about fundamentals. Sorry about that. Telemarketing call. You love it? Yes, I'll take 10. Okay. So, so in the morning when I get up, I'm looking for ideas. And the ideas come from charts that are gapping and running. Now, everybody says to me, what do you look for? I look for stocks that in pre-market are up between 300 and 500% in volume. A stock that's gapping substantially, at least 3 to 5%, 5 to 10%. I want something that's popping. And I look at the chart and I see if there was a trading range there or if there was a base there and this is gapping out of that area, it's likely to have momentum and continue. So I'll put it on what we call a watch list. And from the watch list of about 30 stocks that I have gathered over the first hour of trading, I'll go over all the charts and create a focus list. This is the stock that we want to focus on, and maybe a dozen stocks the most. Okay, and what's going to happen is invariably stocks that are moving pre-market may run, they may not run, But there's also stocks that didn't move in the pre-market that suddenly after the market opens, they start to move, and I'll include those in the list too. But the key to what I do is I come in every morning and I do constant online webinars. Now I create a webinar in the morning. When I come on pre-market, I do a 1-hour webinar with everybody, showing them what the focus list looks like and what those charts look like pre-market, before the market opens. And then I'll focus into about a half a dozen to a dozen of those stocks, and I'll put out either buy alerts or continue to say, let's keep this on a watch list till we see what the early action looks like. Some of them are so compelling in pre-market that they're trending, they're consolidating, they're moving up, and it's not even open yet, and it's trading 5 million shares pre-market. Yes? No, 1-minute charts. I trade intraday charts, 1-minute intraday tick charts. You'll see what I mean. But if I didn't have the time frame on it, you would know the difference. And why? Because stocks form the same patterns in all time frames. In 2000, when the market crashed, I decided I didn't want overnight exposure. The market was too volatile. So I decided to look at chart patterns and say, you know what? These same patterns that I've been watching on daily charts are forming on intraday charts. First, I did 5 and 15-minute charts. And then I noticed that even 1-minute charts created breakouts, flags, pennants, coils, and all those patterns that you look for continuation patterns after a stock pops. The key to trading, in my mind, is after the first pop up, watch the first pullback. If it doesn't pull back a lot, or if it goes sideways and forms a flag or a consolidation, it's usually the pause that refreshes before the next move up. And stocks tend to move in 5 waves. So I'm looking for 1, 2, and then I'm looking for 3, 4, 5. So, I have a theory that by midday, in a 5th wave move, you sell a stock. And the reason for that is kind of a funny reason. But institutional traders who make money based on a percentage of their profits, those institutional traders are going to lunch. That's funny as it sounds, but in New York at noon, you'll see a lot of stocks pause. And that's because traders are exiting their positions. If they had a profit, they're not walking away and coming back and watching that stock be down 2 points. So that's why you see a lot of stocks go 1, 2, 3, 4, 5. The 5th wave may be a spike. Traders sell into that spike. And the rest of the day just flitters around, doesn't do much. So I'll show you some examples later on today. So what we're trying to do is catch big surges and recognize those moves to be able to make money. 10 minutes after the market opens, I come back on with my people. And by the way, all day my webinar is up. You can see me playing with my charts and drawing my lines. So that never comes down. You always have the ability to see what I'm looking at. But the audio part, I come in around 6 times a day for upwards of 45 minutes to an hour each, where I go over the entire list of stocks we're following, update you on what the channels look like, what the patterns are looking like, and whether or not those stocks should remain on our watch list or be sold, and or have their targets raised and their stops raised. The one thing you get in my site is I tell you what to buy, I tell you where to sell it, I tell you where the stop loss is on every stock. So I have, and one of my best stories that I told you yesterday is I have 3 guys that are professional golfers on my site. And they go out every morning and hit balls. And sometimes they play around. And those 3 guys know each other, and all 3 trade in my room. And all 3 come in the morning, pre-market, they see what my picks are, they'll put 3 or 4 trades up. They'll put sell orders in at the targets, they'll put a stop loss in. And by the 6th hole, they're looking to see how much money they made. So I said to them, how is that fun? And the answer was, forget about fun. It takes the emotions out of trading. If you really care about just making money, that's one thing. If you care about participating and having fun and learning, that's another thing. People come into my site, they tell me that 2 or 3 months of my site is like 2 or 3 years in a classroom. I love to teach. I used to be much tougher. When I was younger, I did one of those profile studies, psychological studies on what you'd be good at. I got a 99 in teaching ability. The problem was I had a 3 in empathy. So you can see me blasting my students. Now, in the beginning, I must admit, I was younger and a little less patient. I was tough on some subscribers who asked me stupid questions. But now I've learned that, you know what, everyone's question is valid. But what I don't want is when I'm live on an update, people are sending me private messages. So you have the ability, and that's the beauty of the site. Let me just show it to you real quickly, and then I'll get into my presentation. I want you to see this. You have the ability to do the following. Send a message to anybody when you're in my site. Like, for example, I want to send Andre a message right now. Just hit a message, and you can send him anything you want. And this is what I do all day. He's updating on what the strongest stocks that they're trading this morning are. Look at Xerox. That's a swing trade. QNST. Those are only 2 current swing trades out of a bunch of other ones. But those are the strongest stocks today that they're day trading. And I'll show you some of those a little later. But in my site, people are very, very... I've done something that I think is really important. When you're in a website, you don't want to be uncomfortable, right? You want to be in a room where you feel like you can talk to somebody and they're not going to bash you. If I got a person on my site that acts like that or talks like that or bashes people, they're gone. I give them one warning and I tell them there's no second chance in my site because I want a place where everybody's comfortable. So when you come on my site, you want to see what people are saying. And if you're curious about, Susie's one of my best traders, Andre, Ron's good, great, and just about everybody on my site really knows what they're doing. If any one time you feel like, boy, this guy sounds like he knows what he's doing, you can send him a message just saying, could you help me? People on my site like mentoring other people, especially newbies. So if you're new to trading and you want to do day trading or swing trading, the difference between a day and a swing trade, folks, anybody? A day trade is a day trade. You're out by the end of the day. In my site, if I give you a day trade, my request is you're in cash at the end of the day. Do not send me an email 5 minutes before the close saying, can I hold this overnight? My answer is at your own risk. Because if I give you a day trade, it's amazing how many times at the end of the day it closes strong and the next day it's down. So, day trader don't. Swing trader don't. Ask yourself when you start out in investing, what kind of trader am I? What kind of personality do I have? Do I have the personality, energy, and time, which is important? Some of you work, some of you are retired. If you're retired and you want to trade, then I recommend looking at some of my day trades. If you're not comfortable with day trading because it's too quick and too fast and you're not comfortable with it, swing trade. My swing trades have done very well this year, very well. Swing trade is 3 to 5 weeks, 3 to 5 days. Anything as little as 3 to 5 days, as much as 3 to 5 weeks. And sometimes, like I said earlier, with NVIDIA, a year and a half later, it's up 300-400% or 500%. So it's amazing how invariably when we buy a stock, sometimes it starts out one way and it ends up going another way. He must know I'm online, see? Hey, Harry, Vegas, baby. You can tell when I'm online because there's a signal, I forgot what it was, that tells you online. Anyway, so at any time you can send anybody a message, and then here's a response. And down here where the red dot is, Andre says, these are the strongest stocks. And 2 guys responded, or 2 people responded. Ron said, so strong you typed PBI twice. He must have deleted it, yeah. I happen to love that company, by the way, because that's Puma Bio. My former corporate controller is their corporate controller. So, and I know a lot about the company. It's amazing. That stock went from 2 to 300 something and back down to about 5. Amazing. That's a buy down here. All right, so let's get into the crux of the matter. In addition to what I do every day, I update people all day. I am live on the internet with you guys for 35 to 45 minutes every hour. In other words, half the session I'm live on with you, showing you charts, going over patterns, giving you recommendations, telling you where to raise your stops to. This is your next target. Or exit, this is not acting well, I want you to pull out, or at least sell half your position and put a stop there. That's the kind of stuff you hear from me all day. I think you'll find it not only a profitable place to be, but a fun place to be, because I have people with good senses of humor, smart traders, people who, as I said, like to collaborate with other people, and people are always talking to each other via private message. So in the morning, here's what we do. I come in, I'm looking for patterns from the previous day that may be setups for the day today. But I'll tell you right now that 90% of my trades, 90%, come from pre-market action. And when it comes to fundamentals, the only time you'll hear me mention a fundamental, unless it's something that affects one of our stocks during the day, in the morning pre-market, when a stock's gapping up 10, 20% and it's trading big volume, I'd like to know why. Is it because it's a phase one biotech result and it's a good one? I'm not interested. I've seen too many phase ones pop and drop. If it's a phase 3 major drug approval, like we saw Constellation Pharmaceuticals this week, literally, folks, in one day went 23 to 109, 23 to 109. And at 75, I asked the question, have they just come up with a cure for cancer? Because it was ridiculous. And I told everybody to start selling at that level. And then at 90, I said, sell the rest of your stock. And it went to 109. And it closed at, I think, 28 that day. So that's the kind of thing you got to, like, my favorite expression is return to sender, because when a stock goes up that fast, it's coming down. But in my morning routine, I'm looking pre-market for stocks that are gapping out of ranges and out of patterns, and that it could initiate a new trade that day. Like these. I want to show you some examples about stuff today that resulted in some great trades for my room, and I wasn't even there. My traders pretty much know what kind of patterns I like. And this morning, these are stocks we're trading. Now, who would have bought that stock this morning when it popped that much and then put a flag on it? That's a bull flag. This here, folks, right there is a explosive surge, and that little consolidation is a flag. See that bar right there? That's a buy. See this bar right there, way up there? That's where I would start selling. That's the way we trade. Sometimes you'll catch one like that. That's huge. Ubiquity went from, let's see, it looks bigger than it is because it's a $140 stock, but it did go from 140 to 176. Not bad, huh? And it did it in what, a couple hours? That's a good one. Check this one out, TrueCar. Now this is this morning. Let's just, that was yesterday. This morning it did that. It popped at the opening and pulled back. Now, I always look at a pullback as to what does it look like, what percentage of pullback it is. If it's a 0.375 or 0.618 Fibonacci retracement, some of you know what Fibonacci is. I'm not going to get into it. It takes a long time to explain it. But things move in phases and they move in waves, Elliott waves and Fibonacci. And I incorporate it in my work, but I'm not an expert in either. But I will tell you what, in the morning, we're looking for a stock that gaps with big, or pops with big volume, pulls back, and the volume gets quieter, and then starts to move up again. Right there was a buy, and that stock went from about 4.5 to 5.5. What was the high there? 4.5 to 5.5, like just like that. Boom, 20%. That's today. These are live charts, by the way. Clovis. Now look at the 3-day chart on this stock. So this stock hit an all-time low here. Check out the daily chart. This is a long-term chart. Look at this. That's pretty ugly. It's a stock that went from 98 to 3. Return to sender. Okay, but see now this is a weekly chart. Look at the weekly bar here, coming off a low. First of all, you have big volume selling climaxes here and here. Turnaround, 2 bars in a row, 2 weeks in a row, and big volume on the upside. That's a major trend turnaround. Now, I don't buy those. I wait for the first pullback. Now, folks, when you see a chart, let's go to a daily because it's more effective on a daily. Here you go. First of all, it's a down channel, and it then accelerates lower. Now, a lot of times, this kind of spike low here would have got me interested. But the problem is you don't catch a falling knife, right? What happens when you catch a falling knife? You cut your fingers, cut your hand. No, seriously, you don't want to catch a falling knife. You want to wait for a stock that's destroyed like that to form some sort of turnaround or base pattern that develops, that gives you a chance to accumulate it. For example, see that first pop right there? Volume wasn't heavy enough. See the second big pop? Not only is that an engulfing bar that engulfed in prior 4 or 5 trading days, which is huge, it did it on monster volume. The first thing I would look at when I see a stock that's come down that far, that suddenly surges out of a base, is wait for the pullback and see what it looks like. The volume receded, and then it turned around, and here's where I buy the stock, when it takes out that high, right there. It gapped up that day from there to there, but even then at 4.15 or so, it was a great buy because the next day it's 5.5. And guess what? This could be a major turnaround. Like, obviously, everyone asks me, what are these lines all about? Where do those lines come from? Mike Thompson from Warden Brothers, who I used to do webinars for, said to me, where are those lines coming from? What's this line? What's that line? If you went back on the chart, you would see it's a prior low or a prior high. It's a resistance level or a support level. So I'll always draw them in advance so that when the stock gets there, you'll know it's a resistance level. In this case, breakout, a big volume. It's right up in this zone. This is the resistance zone. Why? It spent a month can't get through, can't get through, can't get through, can't get through, and then down. So the next time it gets up there, that's a resistance level. This level up here at about 6.25 is where I'd be a seller if I just bought it here at 4.25. Why? Because it's probably going to pull back and consolidate and set up for the breakout. The pullback, if it comes on low volume, see, stocks go up on heavy volume, they come down on low volume. If they're bullish, when that reverses, when you're in a trend where stocks are going down on heavy volume, up on light volume, down on heavy volume, you see that? Down on heavy volume, down on heavy volume. When it suddenly reverses to up on heavy volume and down on lower volume, that's their turnaround in not just technicals, but in the trend itself. The price is turned on Clovis. I think Clovis might be a good, I'm guessing now, but this could be the beginning of a big move on this stock. I also think Clovis is going to be taken out, acquired. Yeah. I would. You see, everyone says to me, "Where's this list from?" See this list? There are 1,483 stocks on that list. These are stocks that I've traded over the last few years, or stocks that are currently active, or stocks that we've currently been trading. But I keep them on the list unless there's a technical reason to take them off. Because invariably, a stock that's active 3 or 4 months later will be active again and maybe a trade then. So I just want to keep it on my list because it may not be news on it, but it'll suddenly pop in the morning. There's no news on Clovis today. There's no.
You would stay intraday with because of all the overhead?
Well, the overhead's above here, though. See, here's what I would do. Watch. On the deal. Well, on a day trade, if you're in the stock, for example, say at 9:30 it popped and then formed a little flag in here. When it broke out right there, I'm a buyer. It went from 490 to 550. It was a 60-cent day trade already. Now, I'm not in the room this morning, but I'll bet you Andre's on top of this because I saw him mention Clovis. So you're in capable hands when you're in my room, whether I'm there or not. But there's a trend here that unless it's violated, I always tell everybody the trend is your friend. When a stock is trending, there's no reason to sell it. The number one question I get from everybody is, how do I know when to sell a stock? How do I know where to sell a stock? Anyone could buy a stock. Nobody knows when to sell it. Well, I mean, you can come up with a formula like I have. For example, you see the lateral line right there? And this line there? They intersect just above there at about 565. That's my sell target. Right now it's flagging, forming a little consolidation. This is the live chart. If it doesn't break down underneath this low, and that's where I put my stop, under there, under 515 or so is a stop. If it breaks out over 545, guess what? I'll buy more. You average up, not down. The person that averages down is a loser. They're going to lose money when you average down a stock. I'm telling you, if a stock goes lower, say a stock is 5 and it goes down to 4, and you like the company, I love the company. The biggest mistake you can make is falling in love with a company. A friend of mine used to say, never fall in love with women or stocks. I can see his point because I've been divorced twice. But, so, here's the bottom line. The bottom line is if a stock is trending, let it trend. See, it's rolling over now. It broke the flag, and it's coming down. What I would do, and by the way, that's another thing. My philosophy, never buy all your position or sell all your position at the same time. Scale in, scale out. The one thing people don't, I made a decision, sell, I'm going to sell. And then 10 minutes later, bitching at me, I should have sold, I should have held some. And I hate when somebody says to me, I gave him a stop loss, the stock was stopped out. The next day, it's down way further. I know you gave this to me 2 3/4, and I know you said 2.5 was the stop, and now it's 1.5. What do I do? Don't trade without stops. I don't care if you're a long-term investor. I don't care if you're a short-term investor. I don't care if you're a day trader. You must have a stop. Not a mental stop. You're not a professional trader for the most part. You don't work for a Wall Street firm. Look, I can do that. I know when a stock breaks, and I know when to sell at the market. I don't care. I sell at the market. I buy at the market. Unless it's a thin stock, and I look at NASDAQ level 2 and I don't see a lot of offers, then I have to bid for stock and or take a little off. For example, if I see 500, I'll take it. If I see another 1,000, I'll take it. But if I want 10,000, I'm not buying 10,000 at the market. The stock will go up 50 cents. So you got to be smart about how you do it and what you do. These are live charts. Now, Clovis seems to be holding it here for now. Let's take a look at this. But it's biotech, and it is volatile, and you just don't know what a biotech stock is going to do once it makes up its mind. See that right there? It's on the trend line. It's starting to bounce a little bit. But bottom line is, just to give you an example of what we do in the room every day, I'll draw a line across these lows. This is we call a mid-channel support line. I don't want, forget this for a minute. I don't want it under there. That's 520. So if this doesn't gather volume and move and run up into that 570 area, that's my next target. My targets are for today, 570 and 610, 615. And those are based on prior highs, and they're based on several other things like measured moves, things of that nature. So in the morning, again, I just want to reemphasize because I don't have a lot of time today. When you come in my room, you get 1 hour of, I do an hour of preparation. I go over dozens of stocks, maybe hundreds. And I go over the news. The only time you'll hear me mention news is pre-market because everybody wants to know, why is it gapping up? It's gapping up because there's more buyers than sellers. I don't care about what the reason is. You shouldn't either. You should care about the price action. If the price action tells you buy, buy. If the fundamentals tell you buy, you probably want to sell it. How many times have you seen a stock pop on news and it drops? All the suckers bought it on the news and all the professionals sell into them. And when you, how many times have you been at, okay, here's a rule. If you learn nothing from me today, learn this rule. If you're at your desk and the stock is going crazy and you hear yourself say mentally or verbally, go baby, go, hit the sell button. When you get that excited, it's probably everyone else is excited, and the professional knows you're excited, and he's selling to you. And the same thing is when the market is getting creamed and the stock's getting slaughtered, like, get this, like when Clovis did this. This is if and when it comes up. Good internet connection. Well, see, Clovis already went bankrupt. They're not trading anymore. No, what I was trying to point out, I hope it comes up, it looks like a problem. Clovis spiked down, and at that time, a bunch of investors were at their desk going, I got to go to the bathroom, I feel like throwing up. That's the time to buy. Professional traders buy panic, sell panic. What I mean by that is panic buys and panic sells. That creates opportunities. That's what you should do. If nothing else, even for a scalp. The problem on the downside is you're buying and you don't know if it's a bottom. On the upside, it doesn't matter if it's a top because you're making money. See, that's the one thing about trading that drives me crazy. I have a friend of mine who bought Apple at $7. It went up to 70. He sold it. He bitched all the way up to 700. I go, how much money did you make? 1,000%. I said, don't talk to me. And what'd you do with that? I bought Dunkin' Donuts at 24. It's 82. I bought this, again. But he still thinks about what if I held Apple all the way up? What if? That's so here's what I was getting at on Clovis. When the thing was getting creamed right here, it wasn't a buy, was it? It looked like a buy. It was oversold. Did it bounce? When a stock comes down that fast, and the best thing to do is do that, it's going lower. My rule of thumb is if a stock doesn't act right, there's something wrong. I don't care what the reason is. I always say that at my site, something is not right. It doesn't look right, it doesn't feel right. Now, I'm 73 next month, and I've been doing this for 58 years. I can tell you that when I trust my gut more than I trust anything else. And when it comes to anything in life, trust your gut. Your gut and your mind will always tell you what to do. It really will. The problem is that your mind gets in the way of your gut. And sometimes you just got to act, be decisive, and make sure that you're trading stocks that have the ability to. Oh, that's another thing. Don't trade illiquid stocks. Now, there's a difference because my traders and I have a discussion about this all the time. Do I want to buy a stock that averages 15, 20,000 a day that's not trading at 500,000 a day? Or do I want to buy a stock that averages 500,000 a day and it's not trading 5 million shares? Does it really matter? It's still 10 times the average volume. So I look for liquidity, but I also look for percentage moves. I'm a big believer. And I know that a lot of you guys like trading the Apples and Netflixes and Rokus and stuff like that that are trading at $120, $200, $300 a share. I believe in leverage. I would rather buy 10,000 shares of a $10 stock than 1,000 shares of a $100 stock. Why? Because as the stock moves up, I can scale out. What are you going to do with a hundred? If you bought 1,000 shares versus 100 shares, what are you going to do with 100 shares? Sell 50? No. So the point is, if I bought 1,000 or 5,000 or 10,000, I have the ability to scale out at certain levels. And when you're in my room, you get targets. I tell you, your first target is XYZ. Your second target is that, and your third target may be there. And I tell you where the stops are. And the beauty in my room, on a 1-minute chart, is that all along the way, when the stock's moving up, like it did there, I keep saying, this is exactly what I would have said, I can tell you right now. See this little bar, that bottom of that bar? That's the stop. I put a stop there. It runs up there and pulls back, it stops right there. It runs up and pulls back, I put a stop right there. And it keeps running up. At some point, you make a decision, okay, I had enough, I'm going to sell it. But there was no point at which this stock stopped out at all until maybe right now. Because it's rolling over beneath the prior lows. So in my room, I'm constantly back on with you. I'm constantly showing you the charts as they're developing. And I'm constantly raising my targets or saying sell half here. What we love is those day runners that go crazy. When this CNST blue went from 23 to 109, I first started telling people to buy it at 43. They thought I was crazy. And when it went to 75 and I started saying sell, I thought there's no way this is going much higher. I went to 109. And it took a half an hour. That's it. And here's a stock that went 23 to 109 in 3 hours. When you catch those day traders and those day runners and you're in my room, it's fantastic. It really is fantastic to watch a stock just explode in one day, in intraday, and you get in the morning, like look at TRUE, pop, pull back, and started to move again, and the volume picked up as it was moving. That's where the buy was right there. Whew. These are the kind of stocks we will look at all day. Here's Clovis. Notice Clovis held the trend line. We were just looking at it live, right? Held the trend line, bounced, and now it's got a little pennant or wedge forming. See that there? This stock wants to go higher. And I'll tell you right now, folks, if you're in Clovis now, just for example, if you were online trading Clovis, and you see this pattern, watch this. That is a bull wedge, and it's right at the apex, meaning right where the lines are coming together. So in a vast majority of time, and we're talking 5-wave moves, 1, 2, 3, 4. Is the 5th wave coming? If it does, it could be explosive, and that stock could go right to 5 3/4 or 6. Now, I would sell right now, once it got through the high at about 545, 546, I would sell a portion at 565, and the rest at 5, or another portion at 575, and maybe I'd throw it for a lark, throw it in at 595 or something like that, and just trade it out, scale it out. If I had 10,000 shares of that, I probably would have sold some right there when it hit the top of that channel. Let's sell a bit, wait for it to consolidate. You notice when I said earlier, this is where I placed my stop. Right there, it never broke that stop. As a matter of fact, it made a higher low, and now it's trending and consolidating. I need to change this angle to there. See it? That's a perfect pattern. If it breaks out of there, I'll refer back to it in a few minutes because we don't have a lot of time, but I wouldn't be surprised by the time we're done here. This stock is 5 3/4. We'll see. Here's one they were trading this morning. And these are the type of trends we trade all day. The stock popped, paused for a few minutes, exploded and pulled back, ran up again. It's probably, that would have been a difficult buy. But right now, check this out. This is what we call wave 2, bull coil. Why is it a bull coil? Well, we got declining tops and rising bottoms, connect the gap, and right there. So this is similar to Clovis, isn't it? Technically, it's wave 1 and 2. Wave 3 could be equivalent to what this move was. So we went from 7 to 9 1/4. That means 225, say about 225 from the pullback low. I'm going to call it 8, 4, about 10 3/4. Beyond that 10 would be a target for me today if it really started to pick up volume. And that's the thing I always say to people. When you see a pattern like this, and you hear me say, if it pops that pattern, buy it. There is an if in there, isn't there? Don't buy it because I said if. Buy it when. Wait for it, because the problem with that, 1 out of 3 times that pattern fails and drops down. Okay? Don't be caught like that. So wait for it. Why wouldn't you rather pay up and see the stock? I would rather pay up and pay 9.5 for it and know that it's on its way to 10.5, rather than buy it at 875 and watch it drop down. Now, you could always take a partial position here. A lot of my traders do that. When they hear me say, watch this stock, it looks good, it's right at the apex, buy it now. Buy more when it takes out the high. If you wanted to buy half a position, say, just for kicks, I want to buy 1,000 shares. I buy 500 right here. I'll buy 500 at 950, 55, and I'll probably sell it at 10, 10 1/4, 10.5, something like that on a day trade. This is what is referred to in Wall Street in technical analysis as a continuation pattern. When a stock pops and does this narrow stuff, a coil, or whether it's a wider pattern that's similar but it's called a wedge, or whether it goes sideways and called a flag, all three are consolidation patterns. All three are continuation patterns. All three indicate the possibility that stock has exploded. They're taking profits, but they're not selling it so heavily that it's dropping down. That's the pause that refreshes. Boom, next leg up is coming. And you can always measure the move from that low to that high, add it onto the pullback low, and get a measured move target. This line that comes in across here, 955 or 58, is probably a prior high from a prior day. Maybe, I don't know, maybe we can see it. Let's go back and see. What is Durham? Why is that line there on Durham? There you go. 1, 2, 3 tops in that area. So for me, it's going to have a tough time getting through there. Should it get through there, that's your next target, 10 and a half, 3/4. So that's why I said 10 and a half, 3/4. That's a big move for that stock in one day. Notice the big move it had here, right? Let's go to 15-minute chart. See the pop and wedge? Now, on this chart, it looks like a wedge, not a coil, right? Because it's a different time frame. But anytime a stock comes out of a base and pops and does that, and the volume is, look, here's the key to this pattern, the key. When a stock gets quiet near the apex, the volume gets awfully quiet. See how low it is? That's what we call low volume ebb. You know, when the tide and the ocean goes out and it stops for just a second and comes back in, that's called ebb tide. Same thing happens in stocks. There's a balance between buyers and sellers. My friend calls it a Mexican standoff because the buyers and sellers are waiting for somebody to pull the trigger. So which way is it going to go out of that wedge? Is it going to pop? If it pops, it'll probably test 955 and it may get up to 10 and a half if it just goes ballistic. And you don't know until you see what kind of volume it has when it comes out of that pattern or not. It's already edging up towards the top of that pattern and stalled right there. This is cool. I love watching these things. So there's a little 4 or 5 minute, these are 1 minute bars. A little 4 or 5 minute flag forming, and it's above the 50-day. I don't know if you can see the red line there, but it's just bouncing along on top of the red line. That's the 50 period moving average, because on a 1 minute chart, it's only 50 periods, 51 minute periods. And by the way, for those of you who want to know, 10, 21, and 50-day moving averages are what I use. And I use it on all time frames. I use them on 1 minute charts, 10, 21, and 50 minute. So we'll see. Right now, 877. The bid is 876, offer by 77. Any buyers are coming right now? There's 880. Do I hear 881? I'm going to leave that up for 79. Somebody got smart. Okay, so this is on the verge of a potential breakout and a trade. We'll see. I'll come back to it. We don't have a lot of time today. Obviously, I'm done in a few minutes. I could have shown you a zillion examples, and I'll show you a few. These are some stocks that we traded over the years. This is from my book. One second. And I said we only have a few. Here you go. So take a look at this chart. So WUBA closed here, opened there. That's the breakaway gap. It popped and formed a little wedgie. Now that was a head fake because when it broke out there, we bought it. It didn't follow through. But what did it do? It didn't break support either. What did it do the next 4 hours? It got narrower and narrower and narrower. Notice these little bars in here. Notice how the volume was almost non-existent. That's the low volume ebb we were talking about. And that often appears before stock breaks out. Often, like most of the time. So what happens suddenly? See that bar right there? Breakout. If you had bought it even then at 35 3/4, by the end of the day it was 38 1/4 for 3 points or 2.5 points. Still about a nice little day trade. But notice pop coil. First a pop wedge, a pop coil, pop flag. And the difference between them is simply this is narrower, that's lateral. Once it broke that flag, even if you paid $36.61 at the end of the day, you could have made a buck 40, $1.50 on it right at the end of the day for another trade. I have guys in my room that traded it 3 times that day. So that's the kind of pattern, and this is one day. So from a close of about 32.5, it ended up getting up to over 38. And it's funny because people are always saying, well, you picked out the best looking charts. Well, I just showed you 10 charts from today. They looked exactly the same. This is a beauty. And it's typical of what I look for every morning when I'm trading. I want a stock that pops. Look at that huge opening gap here. Close there, open there. Wide opening gap, right? It went up even further, and then it came down in a three-wave corrective and bounced and formed a little wedge. When it broke out of the wedge, it ran up to a little bit of resistance, made a nominal new high. There wasn't a ton of volume, and then it flagged, and then it coiled, and then it just kept going up all day. But what did it not do? It didn't really break support anywhere along the line. And that's what, where we're looking for charts. The best trade is a rising, this is not quite 45 degree, but I want a chart that starts here and goes up on that kind of an angle, 45-degree angle. The vast majority of stocks move in 45-degree angles. The vast majority of stocks move in 45-degree angles. So this is the kind of stuff you see in my room every day. And the best kind of trade is a stock that just keeps going up in that angle. And then sometimes stocks will move in 5 waves. And I mentioned to you earlier that if a stock has a 5th wave by lunch hour, sell it because institutional traders are gonna. This is a nice looking little chart. Check this out. So it starts out quiet. This is really intriguing to me. This was the day before. It popped and pulled right back. And then at the end of the day, it got right up to there, right up to the high. And then the next morning, it exploded and formed a wedge. It broke out of the wedge, but couldn't get to the high and pulled back very quietly, little bars in here. Got all the way down there at a very, very low volume ebb. And then broke out and went ballistic. It's a 1, 2, 3, 4, 5-wave move, and that was it. And it did it by lunch hour, I believe. Yeah, 12 o'clock, right here. So that's the kind of stuff we look for. And I only have a couple of minutes, so what I'd like to do is take, anybody have a question about anything? Yeah. SMA, which is simple moving average instead of exponential. Anybody else?
So if I was getting the most out of the room, do I have to get up at 5 in the morning?
Yep. Yeah. Let's put it this way. You want to be rich or you want to sleep your life away? You know what? If you're rich, you can sleep your life away. Once you're rich, then you can sleep your life away. Like I tell look, am I pretty good? I think I'm very good, and I have a high degree of profitable trades. But if I was really like the best trader in the world, would I be doing this? The answer is yes. You know why? Because I love teaching. I really do. I love getting new people in a site and having them say to me, I just bought a Ferrari, I just paid my house off, and stuff like that. I hear it all the time. One guy yesterday I ran into said, Harry, I just want you to know I've been with you for 12 years. You've completely changed my life. That's rewarding. 78, roughly, from what I remember. And in terms of day trades, swing trades are, I think, around the same, a little less. But the point is, it doesn't matter how many trades you made that are profitable. It depends how many losses you took that were small losses. Yeah, because to me, you can take 4, 5, 6 losses in a row if they're little ones and you're stopped out, and then that one boomer that makes up for all of them, you know? Risk, yeah. Typical risk-reward ratio? You mean win-loss? Oh, well, that's a whole different story. Okay, because everyone asks me, well, how many stocks should you be trading? How big should your portfolio be? It depends on how big your portfolio is. But I still believe in 3 to 5 positions max at any one time. Because for 2 reasons. It's more manageable, number 1, and number 2, you can have bigger positions and be able to trade around the core positions and scale out stocks. For example, you had a stock at 10 and went up to 15 and you had 20,000 shares. I want to take 5,000 off the table and use that to trade something else. You don't want to be overly, encumbered with 2 or 3 stocks if you're in a portfolio. In my room, though, everyone's in and out by the end of the day, for the most part. Unless you're a swing trader, there's a lot of very nice swings. I wish I could spend all day with you guys. I can't, but do me a favor, do yourself a favor. Come into my site for free. No credit cards. Don't worry about that. Just sign up, and you'll be in there for 2 weeks for free, and you'll get a free DVD set if you don't want to sign up. All right? Thank you for being here, everybody.